folks. Welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all Wall Street hype and nonsense. Today's video for Monday, February 25th, 2008. Well, today was a great day. A couple interesting things happened today that I want to touch on, and it really is significant in many aspects. Not only because key levels were possibly broken to the upside here, but also because, as you guys have known, we've been talking about a possible bounce coming in, the secondary bounce to the one we had going into Options X week a couple weeks ago. All right, and it does look like it's borderline where this may start, although we've now had a significant move to the upside in the Dow. For instance, the Dow was up Friday 100 points, while the Dow today was up another 200 almost. That's quite a significant move, and we may need a pause day. We may have one more push tomorrow morning or tomorrow, but we do need a pause day at some point before it can gather some more strength and push higher. All right, so let's get right into the charts here, and I want to show you what happened today on the intraday. And what we can see here is that early on we were trading about the flat line. The market was up early. Yesterday in the evening when the futures finally opened, they were up significantly. The futures were as high as 8 points higher. The Dow was up 50 points and all that stuff. But what happened was, as the day went on and the nighttime went through and it came to morning, this morning, the futures began to decline. And you can see what happened here. 8 o'clock, we dipped. We opened basically on the flat line and sold right into that. The market dipped as low as the 200 moving average here intraday and cutting right through it. But again, you never got to close below that line, as you can see right there, and the market saved it. A nice reversal candle, in fact. And those of you guys that know about engulfing candles to the positive side, or reversal engulfing positive candles here, you can see that move just directly right up, taking out the whole red candle. Whenever it does that, that's a bullish sign, and you can see the move we got out of it. A nice little rally, taking us positive. Then you had another sell side come in, and another dip. All right, and what I do want to point out here is there are a couple other patterns I want to point out. Number one, you have a little W pattern here. Look at that. Great W, and even a V pattern on the intraday chart. So you got the W, and notice the W beautifully right off the 200, and the right side of that W slightly lower, which is even better. You never got to close below that 200 here, and then right up we went. We rallied hard, pulled back, making the V pattern, and blasted to new highs, making the completed WV pattern. So a great little pattern there intraday. I also want to touch on an SPY pattern that we saw today, and something very unique about this. Remember on Friday, folks, we talked about that fake out, how big money kind of pushed the market down right before that announcement of the possible bailout for ABK, and how a lot of amateurs get faked out. The key here, guys, is that happens more than you guys can know, and it's so important not only to keep stops in this market, but also understand the fake outs and when they're coming. For instance, on the SPY intraday here, you see a head and shoulders pattern. Well, everyone says, that's a negative pattern. We're going to probably break down, blah, blah, blah. Everything's going to go to heck here. Take a look at this head and shoulders pattern right here. All right, you have a nice head and shoulders pattern. Oh, I'll draw it right in there. And now what you want to do, you want to draw that breakdown line in. Okay, so you draw it right here. And now look what happens, right? We actually close below. We even tick a little lower. But what we didn't see, and what you can't see on this, is that you want to look at the 60-minute to confirm it. And this is a fake out if you're just looking at the 10-minute, but you can actually see it on the 60-minute if you want. Take a look right here, and let me erase these lines that are on from the other chart. All right, you have a thrust here, a pause, another thrust higher, and a pause. This is telling us that we have another push coming. All right, and that's what happened. So if you combine the two charts, and this is why it's very key, and as traders, as you guys advance through your studies with us or without us, you want to make sure you expand on your time frames. You guys know we preach about looking at all time frames to get confirmation. The only plays you should be taking, short or long, are ones that are confirmed not only on a 10-minute, for instance, but also on a 60-minute. Or if you're looking at the daily for a swing trade, not only on the daily, but on the weekly as well. And if you do that, you'll increase your percentage of winners astronomically. And again, you want to make sure you're at a point where you're having many more winners than losers. And the losers, everyone has them, but you cut them fast, you cut them small. All right? So again, now we're looking at the daily chart on the SPY, and I'm moving to the daily. We were just looking intraday. Now let's go to the daily. And what we want to take a look at is the triangle formation we had seen. Now remember, on Friday, it looked like we were going to actually break down out of that triangle and possibly retest the February 7th lows, which are right here. All right? And what happened was they saved it late in the day, and they pushed it right back up into that triangle. Well, today we rallied even more so, and they took out the triangle to the upside, and we actually closed there. So now the question will be, do we confirm this move tomorrow? Do we confirm it? Do we stay outside this triangle? If they sell us right back in that triangle, well then it's the move is negated and you're right back in that triangle. So what we're going to look for over the coming days is either a continuation move higher tomorrow or a small pullback consolidation pattern staying on the upside of the triangle, setting up for a move possibly upwards of this 50 moving average right there. All right, and that is ultimately where we think we're going. And notice how that 50 moving average now coincides with this line right here exactly. And that's always how things work. The symmetry in the market continues to amaze. So keep a close eye on that. We may consolidate here. We may have one more small push up tomorrow. Ultimately, it looks like we may test this 50 moving average to the upside. Okay? All right, and again, you can see how beautiful it is. And look at the point here. This is the January lows, right? When we hit those on those 2 separate days where the world markets, took a major hit, and we pushed up each day right to this level. If you take that level and you just draw a sideways channel, you can see it's almost been in a straight sideways range, and this is the first sign that we may be getting close to a breakout. All right. Ultimately, you want to get above the high right here, and this line, which is right where we are. All right, see how these tops of these candles all came up in this range? You really want to take that out to the upside, then it should be just a hop, skip, and a jump to this 50 moving average. Now let's take a look at the NASDAQ on the next chart. And we're going to stick with the daily now. We covered the intraday and the patterns that we saw in the intraday. The NASDAQ is still fighting here. And the NASDAQ hasn't moved out of its triangle, and it's still trying to. So if we draw the pattern here, the triangle, you can still see it's in that triangle, but it's testing the upside of the 20 moving average again. If this can get above that 20 moving average, it should break to the upside, clear that triangle, and then you can see if we can get a decent rally. Your first area of it has to clear is right here. All right, so we need to get above that high of this candle here, which would break us out of the channel here, the triangle. And then once we're out of that, then you look for the first resistance, which would be right around here. All right. And second area, which will probably coincide with the 50 moving average moving right down. The 50 moving average probably by that point will have come down right in this area, and you'll end up in this general range. All right, so keep a close eye on that. Of course, on the downside, we always have to look at both sides. So not only do we look on the upside here, but on the downside, you always remember February 7th low is key. That's major support there, right here. Should we come down and test that level, you watch for a break of that level. If that breaks, bam, to the downside. Now, if you're long in this market, there's two ways of looking at it. If you're long in this market and you're waiting on the SPY, and we'll talk about the SPY first, now we're out of that triangle. Should we pull back in that triangle, you got to move out of that, all right? You just have to be careful. You always have to protect the downside. Your stop should it move back into that triangle or right below. But as long as you stay above here and consolidate, you can look for another move higher. On the downside, you obviously should be closed back below this area of the triangle. You look for another move to that February low, and then possibly, should we break that, you're going back to the January 24th-ish lows as well. All right, so keep a close eye on that, and I believe that was January 22nd and 23rd, these two lows. All right, that was a Tuesday and a Wednesday, as Monday was closed for a holiday. Alright guys, other than that, keep in mind there's a couple big events coming on here at InTheMoneyStocks.com. Number one, starting next Monday, you will be able to sign up for the E-mini intraday stock chat, alright? So you're having the stock chat incorporated with the E-minis. Not only are you getting the E-minis now, but you're also getting stock calls where you can play ETFs off those E-mini calls and market moves, as we do call everything. We have two moderators on the mic now, and it will be fantastic. Alright, so if the market's slow for day trades, you play the E-minis. If you like the E-minis, you can always play the ETFs. If the ETFs and the market's doing something, you'll have also stock trades coming up as always in the intraday stock chat. So we've really enhanced the intraday stock chat. Come join now, because starting in a couple weeks, the price will be increasing because of those. So you want to lock in your payment now and take care of that. Again, starting next Monday, that will be available for sign up and will be launched on Tuesday for the E-minis. All right, folks. Other than that, that's about it for today. Keep watch of those key levels mentioned in the charts here and in the video. And again, come join the swing trade alerts, the ETF alerts, and the options alerts. We'll talk to you soon and see you soon. Take care.